This is Notepad. I'm your host, Ibrahim Sani. This evening, we shall be speaking with James Hay of the Pangolin Investment Fund. James is dialing in, not from Kuala Lumpur. In fact, James, where are you right now? Why are you not in KL?
I have a Malaysia, my second home visa. I lived in Malaysia, as you know, for nearly 30 years. I had to come over and see a sick relative. But unfortunately, they won't let me back now. They're saying that England's a high-risk country, but actually the numbers in Malaysia are now, I think, higher than anywhere else in the world. So it's sort of nonsensical to me, this. Plus, I haven't just had 2 jabs. I've now had 3. I've had 1 AstraZeneca in the UK, in Malaysia, and 2 in the UK. So I think I'm pretty low risk, frankly.
Right. Before we do all that, I think we want to talk a little bit more about the pandemic. Where do you see us solving this issue once and for all?
I think once there are enough people vaccinated, as England has realised, you can get the number of deaths down to no more than a bad flu year, and that's basically what's happening. I'm actually in Menorca in the Mediterranean now because I was there too long and it started getting too cold. So I'm sitting out my enforced exile on a nice island at the moment. I might go somewhere else in Europe, but it's quite interesting. Europe's pretty much open. And if you're double vaccinated, it's very open now. And that's the way the world's going to be. So once everybody's double vaccinated, it doesn't mean there's no risk, but it means there's kind of not much more risk than having flu. And therefore, the world will then live with COVID in that shape. That's my reading of it. And it's really interesting. And I was at the football in England. You know, there are 60 or 70,000 people at the final for that. I've been at a cricket match with full capacity. I've been at Wimbledon. It's really nice to get out and mingle again and everything else. And, you know, some people will unfortunately still die of this disease. But the world has to go on. Economic activity has to pick up. And there are so many other negative effects as well, i.e. people with cancer can't get treatments or anything else. So, you know, once Malaysia gets its vaccination rates up, and it's going pretty well, then I think there's absolutely no reason not to ease off.
Pangolin Asia Fund. Now, you guys are outperforming the market. You're not just back to 2017, 2018 levels. You're a little bit more than that. What's driving this growth, James?
Yeah, we're actually at a record high now. We had a very good month last month. Last month, the fund was up 4%, and I think the ASEAN index was down 3%. So we are stock pickers, and we've owned the company. We had 3 companies which did incredibly well last year, one of which doubled in a week. And two of them which did really well, we've actually owned for something, one for 13 years, one for about 8 years, and the other one which doubled, we actually bought last year. So some people say, what did you do last month to get that performance? And our answer is we never do anything very exciting in any particular month. We spend most of our time reading and researching and talking to businesses, these days over the phone like this. But actually, the groundwork was put in, you know, a long time ago. And what happened is that we've realised that there are a lot of very cheap companies, in particular in Indonesia. We've increased our weighting in those businesses, and it just so happened that last month that the market, for some reason, you know, caught up and agreed with us, and three of them all at once. I would also add that we have another sort of 17 or 18 companies in our portfolio which we think remain still very undervalued. So hopefully, you know, at some point, things will catch up too.
Okay, the main reason I wanted to speak to you is because of your views on Indonesia. You read the World Bank report, you've read corresponding reports on Indonesia, plus you have had your own views on it. You pepper it with these kind of facts and figures, and you made a personal video of it. I find it very captivating. Tell us more about what you think is going on with Indonesia and why people like us should be a little bit more interested in finding value in companies that are operating out of Indonesia.
Yeah, no problem. And one of the great things about lockdown is I actually had time to read a 222-page World Bank report on Indonesia, the sort of thing which, you know, normally I just glance at the headlines and then be too busy to be doing something else. So, you know, there are some benefits of having nothing else to do. But the interesting thing is that Indonesia's economic growth has been this is all up until 2019, of course, has grown at 5.6 per annum for the past 50 years. And there's no reason why it won't continue growing at that kind of rate for another few decades. But then the really interesting thing is actually the growth in the middle class, the number of people who, and middle class is defined as having financial security. That growth is at 10% per annum. A number of people moving into effectively financial security, middle class, is 10% per annum. And the amount they consume is actually 12% per annum. Their growth in consumption is at 12% per annum. Because they're obviously richer and they're consuming more. And actually on a per capita basis, it's even higher because they tend to have smaller families and smaller children. As you get richer, you need less children, particularly as you move into the cities. So this is a really exciting story. We all know the China story. We all know the India story, but nobody's talking about the Southeast Asia story or the Indonesia story specifically.
Pangolin is big on consumer discretionary. You guys are big on healthcare, on the financial sector. And the World Bank that you referred to on Indonesia surely would consume more in this sector, no? Do you think that this is going to grow even further?
Absolutely. I mean, when people start off as subsistence farmers, they don't consume any of these things. Indonesia's very underbanked. Most people don't have a bank account. In fact, a lot of them are moving straight onto digital money, of course, through their phones. A lot of people don't even have a mobile phone. They're still using the old-fashioned phones. They don't have smartphones. There's so much growth to come. As I've always said many, many times, you work in a paddy field as a girl. There's no point putting lipstick on in the morning. You get a job in an office. You start dolling yourself up a bit. You have more money to spend. You move from eating rice and noodles. And biscuits are a big snack in Indonesia. This is all sort of Malaysia sort of 30, 40, 50 years ago. You move from eating those kind of things to eating burgers and sandwiches, right? And meat, meat every meal, not just occasionally. So there's a huge growth. And of course, everybody wants a car. As we put on the cover of the many years, it basically says there are 670 million people in Southeast Asia, and they all want a house, 2 cars, and high cholesterol, just like everybody else. And that is the way the world is moving. And then, of course, along with high cholesterol, comes the need for greater healthcare, and people will pay for healthcare, and particularly if the government can't provide it.
How do you think Indonesia will stack up against other markets in this region, in Southeast Asia? Pangolin is big on, I would call it MIST, M-I-S-T, Malaysia, Indonesia, Singapore, Thailand. But what about, I don't know, Philippines or Vietnam? Do you guys plan to go into those markets as well?
Well, Indonesia is a country we know very well. I have 2 Indonesian colleagues, and so we know it very well. We don't actually invest in the Philippines or in Vietnam or anywhere else, basically outside of Malaysia, Indonesia, Singapore, and a bit of Thailand. And a lot of that is because we don't think we need to. We're not big enough, and we like to concentrate on where we think our expertise is. But there are many, many similarities between Indonesia and the Philippines. However, I would say that in terms of ease of doing business and general progress, Indonesia is doing much better than the Philippines at the moment. And I think Indonesia is a very good proxy for the whole of ASEAN, because it is the largest economy, and it sort of sits rather in the middle of economic development everywhere. Vietnam, I think, is a very good story and is doing very well. But again, it's not our market. We will leave that to other people. Currently, the whole place is locked down. But Indonesia, in terms of ease of doing business, it was 120th in the world in 2013. That had improved to, I think, can't remember the number now, something like 80th. In the world by 2013. So a significant improvement. There's still a long way to go. But I've been visiting this country for many, many years, decades now, and you can just see the improvement. And you can also see the manufacturing that's coming in. The Koreans are going to start making batteries for electric vehicles there. This was announced the other day. This is a huge investment that a few years ago, almost all vehicle investment in Southeast Asia went to Thailand, but Indonesia is taking more and more of the pie now.
Shifting gears a bit, I just want to focus a little bit more on the pandemic. Indonesia right now is the epicenter of the pandemic. The number of cases, daily cases, is actually shot through up the roof. Number of daily deaths as well. And, a lot of people are attributing this to poor vaccination drive. They're attributing this to poor public health care management. And there is a long-standing issue of whether or not Indonesia can come out from this a little bit stronger than initially thought. Do you think that this will impact growth prospects of Indonesia? What do you think is going to be the big issue when it comes to the pandemic and Indonesia?
Indonesia is a vastly improving place. And it's not the only country that's behind on vaccines. Vietnam, the population of total vaccines is 3% or something. It's even behind Indonesia. Indonesia is doing its best. I think we've seen from Malaysia that everybody is just clamoring for more vaccines. The West are giving everybody a third jab. Yet, a lot of people in the world haven't had a first yet. So there is this inequality. I say Indonesia's doing quite well on this. It has to overcome a lot of vaccine skepticism. I have a couple of Indonesian maids, and their chat groups are all about sort of rumours that AstraZeneca might be made from pig's pancreas and things like that. And I also, incidentally, have heard that there might be an underreporting, because she's saying in her kampong, in her family's kampong, where life is going on as normal. If people don't get ill, they don't want to go to the hospital in case it is COVID, because they've been told that they won't get a Muslim burial if they have COVID. Now, I'm sure that's not true, but that's something I've been hearing. So that's slightly worrying too. But it's a human tragedy, but the world will get over COVID, right? And I think the world will be over it by the end of this year. I think everybody will more or less, vaccination rates will be 70 or 80% pretty much everywhere by the year end, and in Indonesia too. And again, once people see that vaccines work, and you're allowed to do much more if you've been vaccinated, I think the rate will pick up. So I'm not too worried by the long-term prospects for Indonesia. This electric vehicle battery manufacturing deal was announced earlier this week in the midst of the worst of the COVID pandemic. So, it is just one of those things. We have to look forward. One has to, when buying a company, you have to be looking at the earnings for next year rather than this year in most cases. But nevertheless, prices are low enough. That's fine too, and we think they are.
Last week, big news, Bukalapak went for an IPO. On the day of its first trading, it shot up 25% and hit upper limit. I just want to test you out here. Are you guys going to go into Bukalapak and all the other tech IPOs like Goto, for instance, or all the other stuff? Do you think that tech is the next big thing?
No. As you know me very well, not a chance. I'm afraid. We are value investors. I've been spending my time rereading Ben Graham and reading Warren Buffett, and we all know, well, we know how to buy cheaply, but what's really important is not getting sucked into overvaluations. And I take my hat off to those who are making lots of money and all the rest of it, but just don't think it's going to last, and don't get carried away. And in the long run, buying better companies at the right price, or I like to call it the wrong price, i.e. too cheaply, serves you much better than punting and stagging new issues as they come through. But it is a function of a lot of people being at home and having nothing else to do. So they are now playing their stock market, as we've seen it in Malaysia last year, in particular with rubber glove companies and a few other things. Malaysian participation in the Malaysian market increased dramatically last year with everybody being at home.
Your portfolio currently, 69%, 70% is on Indonesia. Is value investing in Indonesia moving forward?
Well, say we are 70% invested in Indonesia, nearly. Who knows? We buy purely companies which we think are really, really cheap enough. Now, we have a couple of names in Malaysia, which we don't own, which we're thinking about owning. We started buying another one just quite recently as well. So it's not like we're not buying anything in Malaysia. It's just actually the outperformance in Indonesia has just been so great of late. It's really interesting. The ASEAN index has hasn't just underperformed. The MSCI ASEAN index is down 15% over the last decade. So everything's got cheaper, whereas the economies have been growing all that time. They haven't been growing all that strongly, but they've been growing and growing and growing. People are getting richer. One advantage of the time zone I'm in at the moment is that it gives me a good opportunity to try and market the fund to US endowments. And it's really hard to get any interest in Southeast Asia at the moment. It's all sort of, well, maybe next quarter, and I call them next quarter. Oh, how about next year? At the moment, you know, we're too busy wondering how much we should have in China or India. You know, Southeast Asia has fallen between the cracks of everywhere else for the investment community at the moment, and that is why it is so cheap. And as we've seen in our fund, it doesn't take an awful lot to move a few stocks a long way. So I think I'm pretty optimistic for the prospects of the markets in this part of the world, purely because they have underperformed for so long. And as a value investor, when you can see value, it's frustrating when it doesn't move, but it's also quite nice too, because you can keep buying it, knowing that one day it should go your way.
Now, your colleague Moshe Aziz is running the aviation side of the Pangolin Investment Fund. And of course, since I don't have him, I want to talk to you on Pangolin and aviation. How do you think the aviation industry is right now?
Well, it's interesting. It's really picking up. There's huge demand for flights. You know, once people are double jabbed and their governments tell them they can go on holiday, they go on holiday. It is just like that. I'm in Menorca. I'm staying in a pretty nice hotel. But you know, I'm paying quite a lot of money. It's not package tour prices. I tried to book a villa. It is August, of course. There are no villas available. But you know, that's normal in August, i.e., tourism is almost back to normal. So therefore, travel will, the moment people are allowed to travel, it is back to normal. So we remain very optimistic for the aviation industry. You know, the US is almost back to normal. Now, where it isn't back to normal is Asia, because of the very high rates of COVID and the very low rates of vaccination. Apart from places like China, but even then they're clamping down very hard too. But the aviation industry is doing fine, actually. If you look at all the indicators, the numbers of new orders of planes, of parts, everything else, everything is opening up around the world, apart from Asia at the moment. Now, but you have to remember that because of last year, nearly all the balance sheets of all the aviation stocks are in much worse shape than they were before. So just because something was trading at 100 in 2019 doesn't mean it's going to go back to 100 necessarily, because it might have an awful lot more debt or twice as many shares. So maybe the target price is sort of 75. But much of the industry is still trading at sort of 25 at the moment. So I remain very optimistic. It's incredibly volatile. It's hard to describe it as a value investment in most cases, in terms of cash flow and dividends and returns to shareholders. But aviation stocks have their own particular way of being valued. And I know you've spoken of Motion before, and Motion's the best guy to mention on this. But you know, the aviation fund's NAV is about 114, I believe, at the moment. I think last night was a very strong day, so maybe it's a bit higher than that last night. I'd have thought the downside is very low and the upside is very high, and that's really how we look at this at the moment as we come out of COVID. And you know, everybody wants to travel again. People want to go on holiday. They want to see relatives. They just want to get back to normal life. I don't believe there'll be a new normal. I think it'll just get back to being normal. So yeah, we're really excited about that fund too.
The Singapore housing market has been in the news very recently, particularly the private Singapore housing market, and their finance minister is now moving towards taxing the wealth, not just income. That's going to be a big deal for folks like you, James. We just want to understand a little bit better about how the Singaporean housing market is going to shape up and how this is going to drive the investing landscape in the island nation.
I think Singapore is in a very fortunate position in that there is almost unlimited demand for homes in Singapore from foreigners, and they charge a 13% stamp on it. Singapore, unlike Malaysia, say, which is always trying to find ways of getting its market to actually go up, and there's too much property. In Singapore, they're actually always trying to keep it affordable so that Singaporeans can still actually afford it. So I'm never worried by the state of the Singapore residential market long term. But there was a big backlash a few years ago now from the Singapore's population, who are basically saying that we can't afford our own houses, and therefore they took measures in order to keep property prices down so it was affordable for Singaporeans. But I don't think Singapore has a problem. There are so many Malaysians who would like a second home. There are a lot of Indians who would like a second home in there. A lot of Chinese would like a second home. Lots of people in the world want a bolt hole if their own country goes wrong. And Singapore is seen as, you know, that rock of stability in Southeast Asia. So it's very attractive to a lot of people for many reasons. So I don't see it as an issue, frankly. Malaysia would love to have the same problem that Singapore has, i.e. too many people wanting to buy its homes. You know, and then we come back to things like the Malaysia My Second Home program at the moment, which has been suspended, you know, which is basically, you know, not encouraging foreigners to be buying homes in Malaysia. Yet there is so much stock around. So, you know, all these things, you know, perhaps done in the name of COVID, but if it's a step backwards, at the same time, Singapore is still taking a couple of steps forward. So, you know, Singapore doesn't have this issue. You know, Singapore should be emulated, I think, you know, in many areas, and housing policy is possibly one of them, or openness to selling to foreigners.
Right. James, are you just bullish on Indonesia then? Only on Indonesia?
Yeah. Okay. Well, I mean, I'm bullish on the whole region. Yeah. I know everybody's very low in Malaysia. I know the sentiment's really bad in Malaysia, but there are some very cheap and undervalued companies in Malaysia too. You know, there are property companies trading at 20% of net asset value. That is incredibly cheap. It's the wrong price. People now think it's normal. In Indonesia, I expect the growth to continue. You know, it's now a functioning democracy. People are becoming far wealthier, they're becoming educated. Middle class kids tend to stay in education much longer. In 2002, middle class 16 to 18-year-olds, only 50% of them remained in school. The number's now above 75%. Once you're better educated, you get better jobs, you get more money, and you're much more employable. And you're more employable to foreign investors too. So, you know, in Indonesia, I'm pretty sure we'll resume its sort of 5.6% growth rate fairly quickly. I suspect the rest of Asia will grow fairly well along with it. Maybe not always at those rates, but yeah, I remain optimistic for the country, and I just remain really optimistic as a stock picker, because I don't think that these growth prospects are reflected in current valuations of most companies, or of many companies, and so I'm excited at the moment as an investor.
Thanks, James. Enjoy your vacation. And of course, with the recent announcement by the Prime Minister on the relaxed news of relaxed measures of fully vaccinated people, we can't wait to have you back here in this country. That was James Hay of Pangolin Investment Management. Their fund called Pangolin Asia Fund is driving the markets right now. It's actually outperforming the market. Do check them out if you have the time. That was all of our conversation for this evening. If you've missed any part of this episode, just head on to astroawani.com, look for Notepad over there, look for Pangolin. There's going to be a lot of interviews and conversations between me and James there. But until then, thanks very much for watching, and goodbye.